The jingle.
You are listening to the Perfectly Placed podcast.
Perfectly placed, right where you need it. Perfectly placed, go on and repeat it. Press play, stay close, you'll feel the spark. Perfectly placed, right from the start.
Hello, welcome to episode 5. God, can you believe it's episode 5 already, Susan?
I know, it's great.
And this one is Talking Mortgages with Julian Gallagher from Fluent Finance Abroad. Welcome.
Thank you for
Yeah,
having me.
lovely to have you.
Wonderful to be here.
Well, we've
Very
just worked out
excited.
we know each other as well, which is good, isn't it?
We do.
I
yeah.
never forget a face.
Unbelievable.
Yeah.
It's quite some time ago, and
It's got to be a good 15 years ago, but when I saw your picture yesterday, I'm like, I definitely recognise you.
and I remember you welcoming me into the business. Each time I came there, you were always so friendly, and I
Oh.
appreciated that because obviously I had to go there to meet new people. You had new starters in that business, and that's who I was there to meet. So to see a friendly face every time was really, really good.
Oh, thank you.
Brilliant.
I try.
Brilliant. So, we're going to talk about general things today, but we've had a couple of questions in, so maybe we should start with them.
Right?
Yeah?
Let's have a quiz. Come on then.
Yeah.
Let's see if you really know your stuff.
yeah. He's not seen these questions beforehand,
No.
so it's a real test.
Mhm.
So we've got one from Owen that said, is there a difference between getting a mortgage for a home versus an investment property?
There is, and it's a big difference, really. The thing about an investment mortgage is that right throughout the banking system and into the political system in Spain, there's no encouragement for investment inside the property market. It's something that's really on vogue at the moment. And what you'll find is that the banks are discouraged from lending for speculation investment in the property market, and as such they tend to restrict lending to 50% loan to value on a secondary property, and even could look towards restricting it further if there was a third one involved.
And
So
what
that-
about the first property? So say you're buying a first property as an investment.
So it wouldn't be an investment, strictly speaking. It would be a holiday home or holiday home or main residence. That's the two reasons that the banks can lend, right? If your holiday home then becomes an investment by way of you renting it out, of course, as a commercial venture, a bank, they're okay with that. There's nothing to prevent you from doing it inside the mortgage contract. But again, if it's for property speculation, then they're just sort of discouraged. So when it comes to investments, yes, you can rent out your properties. There's nothing to prevent you inside mortgage contracts from doing so once you've bought the property. If you want to build things out further, then really you need to start to think about commercial ventures and setting up SL companies in order to build out a buy-to-let portfolio.
Right.
Step by step, gain the trust of your lender, and you might be able to progress, but certainly not in the same way as it would be in the UK, where it's really welcomed and a commonplace.
But there is other way of
So-
so it's definitely doable.
Always a way, step by step. Everything's slow in Spain, so one property at a time. Expect lower loan to values, definitely going to be the case, and eventually, if you do go to a second or third property, you're going to have to move on to commercial rates and start thinking about SL companies.
Right.
It's not straightforward, but nothing worthwhile ever is.
No, that's very true.
Yeah, so it's achievable, basically.
It is
Definitely
achievable.
So I've got a question about that in terms of because I've been told that if you apply for a mortgage from a bank and you don't use a broker and you get rejected, you can never use that bank again. Is that correct?
You burn your bridges, yeah. It can be really quite bad. So if you've approached the banks directly yourself, or if you've approached with a different broker, you might have tried with a separate broker before coming to a whole of market broker like Fluent Finance Abroad, then once the approach is made, you can't reapproach. There's no
Did you know that, Tracy? Because I didn't know that until very recently.
Sort of,
Yeah.
yeah, but only when we got our mortgage
Right.
originally.
Yeah.
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 So it's just something to be careful of. Really.
You've got to be super careful of it. I've got a message on my phone from a previous client. Set up his mortgage for his first property, just a step into the property ownership in Spain. Little apartment, bought that, used our services, everything happy, great stuff. Decides that he's going to buy a villa now.
Right.
Has relationships, made relationships with lawyers and so forth, bank representatives, decides to walk alone
Right.
on advice. Why pay a broker? Now he's just found himself high and dry, committed to a property and declined
Right.
for a mortgage. Now,
Can you step in at that point?
no, the damage is done. Would we have saved him from this? Yeah, definitely we would, because we could have. There's two ways it could have gone. We could have told him, no, you don't fit the criteria for
Yeah.
this,
Yeah.
So
This-
he
saved
this
didn't
is
him.
the
commit
end of the
himself to
journey.
villa. Yep.
Yeah.
Okay.
or we could have taken it on, used the time in advance of committing to a property, to secure the mortgage, get it agreed in principle, and then he could have moved forward with confidence, and he could have had 2 or 3 offers. Now, very difficult to see how I'm going to be able to help him. Depends on how
Right.
many banks he's been registered with,
Right.
if there's anyone left. Each bank's got different appetites for lending, so
Yeah.
if he's got...
And do the banks speak to each other? If you've been denied at one, do they speak to the other one or?
No.
No, okay.
No. But a registration just takes a few minutes, so you could easily be registered with all banks once you've spoken to someone.
Right.
It wouldn't be the right thing to do particularly, but it does happen. Again, we'll just have to see with that particular person, but there's a right way and a wrong way of doing things.
Yeah.
And
And once you get your mortgage approved from a bank, how long does that stand for? So in terms of like people are trying to, let's say they see their dream property and that falls through, but they've had a mortgage approved. Does that mortgage approval stand for like 2 months, 3 months, or does it not work like that?
depends which lender. Between 1 and 3 months is the answer. But the thing about a banker Spain approved intermediary, which we are, we can keep an offer alive as long as a client needs it. When you're getting buyers from Dubai, China, Kathmandu, you name it,
Yeah.
Ukraine?
they're not sometimes, although very tricky to
Right.
to get lending for Ukrainians at the moment. Any kind of political unrest tends
Right.
to lower the appetite for lenders. Even
Right.
they don't take an opinion on things like the conflict there. Don't take a side, but just unilaterally risk
Yeah.
appetite
Okay. Alright,
sort of
that's
falls.
So God, you can keep the offer open.
Yeah, so we can keep offers open, and you go through what's called a reapproval process. The offer will expire. There's no preventing that, but they've got the peace of mind that if their circumstances, it helps a lot with new builds as well. Where you're
Right.
buying off plan and things, so you can have an assessment done, agreed in principle, get terms and conditions laid out in front of you as well, so you know exactly what you could expect in terms of a mortgage. And then when you come to need that mortgage, as long as your financial circumstances haven't deteriorated or they've improved, all we do is update the risk file, so bring the financial information up to date, go through the reapproval process, and then the mortgage is issued and turned into a binding
That's
offer.
useful to know, isn't it? I
Really
think.
useful. And is that a given at that point, pretty much?
Is it a given? You can never say 100% with anything, but it's a given if nothing's changed. That's
Yeah.
for certain.
Right.
Okay.
So what will have changed is the pricing during that time. So you've been approved and given an agreement in principle on one interest rate. Well, it might be a different interest rate when you come to actually go through the reapproval
Right.
process.
Right.
It might be better, it might be worse, but what you do have is a reference point, an anchor for an underwriter to look at. They say, oh yeah, I remember writing that,
So it's
we
quicker.
offered this, so we're going to try and stick to that, stick as closely to that
Right.
figure as we can. And is it quicker? Yeah, 100%. reapproval process. You sort of turned around within 2 weeks, and then you've got your usual time frames. 10-day cooling off period to the notary, the time to get the valuation done, a fortnight. So you're probably about 4 weeks away from
Right, okay. So it can be done
the
really
keys
quickly.
at notary. I think so, yeah.
Brilliant.
Yeah.
Okay.
Go on, let's have another question.
Right,
Tracy.
another question from Louis. That's what is the biggest misconception from people abroad when getting a mortgage here in Spain?
So it's always that things are similar or the same. They see familiarities in their own system, whichever the home country is. That there are similarities, certainly in Europe, and inclusive of that, the UK inside finance and how it works, etc. But it's a different culture, it's a different mindset, it's a different risk appetite, it's a different history. We're in a completely different environment. So it's like to say, well, I speak Portuguese, I speak Spanish. They're the same. They're not the same, are they?
No.
Right?
No.
So we speak finance, and we speak it every single day. We're fluent in finance.
Yeah,
That's,
yeah.
Hence the name.
Yeah.
So for us, we can help those people navigate the things that are different, because it's those small differences which are dangerous. That's
Right.
where the pitfalls
Well, if you had to
lie.
identify one difference, what would it be?
One difference, I would say that customers are always talking to us about their assets,
Right.
the wealth, what equity they've got built up inside properties. And in the UK, that would have an impact on a risk profile of an individual,
Yeah.
It
Yeah.
would be a consideration. Yeah, they're not interested.
Yes,
Yeah.
I know that.
Yeah.
I've had that experience with clients before. Yeah.
Yeah, it's lovely to hear. I mean, I love a list of assets. It's always nice to
Yeah.
hear what people
Have
put-
achieved.
yeah,
Yeah, what they've achieved. Yeah.
Yeah, it is.
Fantastic.
Yeah, I'll give a big round of applause at the end. And now let's talk about your debts versus your income,
Right,
because
okay.
the Spanish banks work on a debt-to-income ratio, and
Right, okay.
they can use that to manage and mitigate risk, lending risk, and also a bit to cherry pick who they work with as well.
Right.
Yeah.
Because we've got no shortage of applicants here, It's
Yeah.
not as if
Yeah,
they're ever
exactly.
the banks are ever going to struggle for a customer.
No, that's right. No.
So
No.
yeah, that's the biggest misconception, I think.
Right, okay. Okay. And
That's useful. Very
yeah,
useful.
it's really useful, yeah. I think the thing is when people move to Spain and they're looking for a mortgage, I'm speaking for ours, is that everything's different.
Mm.
So you have to sort of just get your head around that everything is, like you say, is sort of the same, but sort of not.
Yeah.
And there's little things that, like one thing that I didn't know when I moved from our last apartment to here, I didn't know that you couldn't complete an exchange on the same day.
Mm-hmm.
So in the UK, you can just sell
Yeah,
your
exchange
place and move
contracts.
into your next one the same day, can't you?
Yeah.
But here you can't do that.
No.
And
no.
that was a big shock to my system because obviously...
And your plans.
yeah, exactly, yeah.
Yeah.
So,
It's as I say, it's the differences, small as they are, that cause many problems. But there are advantages as well. One thing that springs to mind is the fact that you can get a mortgage agreed in principle. Not like a decision in principle in the UK is different, and generally speaking, you'd need a property
Right.
in order to get a decision in principle. You've got to be committed to a process of buying a property to get a decision in principle from a bank. Here you don't.
oh really?
No, you don't
Oh,
need
I
a
didn't know
I
that
didn't know
actually.
that at
I
all.
thought you had to have a property.
I mean, it's best if you've got a particular property in mind, but it's not 100% necessary. So, in the sense that you could be buying off plan, for example, so it will be that property, or will it, maybe it'll change within the next 12 months.
Yeah.
So, the agreement in principle process, when you go through it, you give an example of the property that potentially you want to buy. You know that you're going to spend that amount of money and it's going to be in that area, broadly speaking. So, okay, this is the property, and then the way that the lending is approved on your capacity to service that loan. The collateral's nice, but as we've already mentioned, assets,
Yeah.
So what about does it help then if you're applying for a mortgage and you've got a chunk of cash already? will the banks be more likely to lend to you if you say, I've got this amount of capital, I've sold my house in the UK, but I want that only covers me for a certain amount of property, like the property I want, but I want to buy a property with a higher value, and I just want to get a small mortgage. Does that help?
Yes, but no, but
Yes, but no, but
yeah. So it helps, but only in the sense that you can articulate that to your lender. So you've got to be in a position that's lifted off the page for them. They're not going to look at it immediately. Oh, look, this person's got X amount to cover the mortgage costs here for the next 10 years if necessary. They're not going to look at it specifically unless guided in that direction.
right.
So if you're sat in a branch, for example, and you're trying to plead your case in front of a branch member, is that going to come across? And the answer is, generally speaking, no.
Right.
Right. Okay.
So it does help,
Yeah.
but only when pointed to. And,
Yeah. Okay. Do you have to take insurance with a mortgage?
Ooh, that's a good one.
That's
Yeah.
Like the really
Yeah.
expensive insurance packages that you seem to be
So
forced.
yeah, but no, but
okay.
so the answer is that you may have to take an insurance to be offered a mortgage,
Right.
but it would be illegal for it to be a condition of a mortgage.
Right.
Right. Okay.
So it can't be part of a mortgage contract because there are certain rules in mortgage law that mean that that's not possible. But there's nothing to prevent a bank from offering you insurance products as part of making an offer of a mortgage to you.
Right. Okay.
It's a bit of
So-
a catch-22.
It
isn't
So
is,
you're more
yeah.
likely to get the mortgage often if you accept all their insurances.
Well, they could revoke it if you didn't. Let's say
Right.
no insurances, no offer. I suppose it's not what happens in practice, but it's certainly not
No,
a condition. It's not a condition of the mortgage. What you do have to have when you've got a mortgage, whether it be through the bank or not, is a buildings cover. You need to have some form of home insurance for your buildings.
Yes. Yes.
But that could be independent of the bank,
Right. Okay.
and it needs to cover their interest. Now, there can be cases made, and I can certainly give you good reasons why a life cover might be a good idea as well, because I've had a customer that passed away within 4 months of buying.
Right.
Now that left the other person in that
And it's not
relationship.
compulsory life insurance here.
It's not compulsory. You could certainly have a mortgage without it, but
Right.
is it good sense? It's a different thing.
Yeah. Okay.
Okay.
Okay. Another question that's been asked a lot is, what is the advantages of having a mortgage broker? Go on, sell yourself.
Well, I mean, I wouldn't do it any other way. You want someone on that wall fighting the good fight for you. It's a 20-year mistake if you make it by
Yeah.
yourself.
Yeah.
So why would you do that?
Yeah.
Yeah.
I don't. There's no reason to justify our existence, but there are so many. You don't know your environment. You don't know a good deal from a bad deal. If we save just a couple of basis points on the interest rate, you're going to reap the dividends for 20 years.
Yeah.
If you avoid one pitfall, you'll be in a great position.
Yeah.
Now, just even on the street that we're sat on now,
Yeah.
there are people that have bought houses that wouldn't have bought houses potentially without the assistance that we've given them.
Right. Okay.
They'll never know that,
Right. Okay.
Because they don't know what's going on in
and
the
they don't
background.
need to.
Right. Okay.
We can sit on that intermediary space right there and take the strain out of everything for you.
Right.
Right.
Okay.
Who wouldn't want
God,
that?
I wish I'd used you. Jesus.
Yeah.
Yeah.
What are your fees? What are the fees? What should, I mean, not necessarily, you don't have to
No.
do it generally, but so people know they're not paying too much or too less. What's like a middle
Well,
ground?
they're never going to pay too much because each fee is specific to
Each mortgage.
that person's circumstances. So if you've got a particularly complicated profile, you're going to pay more for the service because it's based on our resources. We're a boutique company.
Yeah.
There's 15 of us, I think, in total. back office and advisory, and then the boss, of course, Mark as well,
Yeah.
who oversees everything.
Yeah.
So those limited resources, time needs allocating to each mortgage. Now, if you're going to consume a lot of that resource to get the successful outcome that you're looking for, then you're going to pay more for someone who, quite rightly, with a very simple profile, doesn't take up resources, when we can put that
But
mortgage
can you be
straight
clear
through.
about those costs in advance?
Sure, yeah. So what we'd be doing is to giving as much advice as we can free of charge in the first place, position the clients so we know we've got the successful outcome. We're 80 or 90% sure before we even take that client on that we're going to get the outcome that we're looking for. So we've done a good pre-qualification. We've orientated them and said, right, if you want us to take this forward, this is how much it'll cost. And we split the fee into two parts. One is a submission fee, which
Right.
covers the time spent up until that point, and the submission of the mortgage, dealing with the various banks, because we are whole and market, so we're going to deal with all of their inquiries that come back to us. They've got queries about the profile of the customer, and the collation of all the agreements in principle into one place, easy to read, that the client can then choose the mortgage. So that's your submission. The final broker fee is paid when we've raised the finance. So when you've got agreements in principle in
Yeah.
place, our duty is extinguished
Right.
at that point. But that's again a key difference between their broker here and in the UK. We can't let go of people's hands. We've got a duty to our customers to take them beyond the finance right up until
Right,
keys
okay.
in hands. So we don't just skip off into the sunset.
Right.
Once the mortgage is done, we'll case manage everything right up until keys in hand. So
Yeah, that's really good.
And for example, like we have got quite a lot of American clients that that have been asking us about getting mortgages.
yeah.
And is that something that you can do, that like it's possible here? Is it
Yeah.
is it more complicated?
No.
No?
Doesn't need to be. I don't know why, but I seem to have a lot of American clients. I spend a lot of time staying late after normal working hours. I've got that many American clients. And the process for them, I would suggest, can even be a little bit easier than some. The banks are sort of smiling upon the American applicants at the moment.
Wow, that's
It
interesting.
does feel that way. They're very happy with the profile that American clients tend to have. They've got very well organised future planning, for example. Good incomes on the whole, carry very little debt. So yeah, they can make an application for a mortgage the same as any other expatriate. Basic documentation required. It's all the usual suspects: passports, proofs of address, credit reports, last 3 years tax returns, and then it starts to sort of change dependent on the type of applicant, whether they're self-employed, employed, blah blah blah.
Yeah.
Right.
12 months bank statements, proof of the deposit. What more? Not much really.
So it's quite a good success rate for Americans at the moment.
Like everything else, there's a perfect
Yeah.
way of doing things. So you need to apply in advance, because American clients, they can buy a property without ever stepping foot in Spain if
Yeah.
they really want to. But you've got to start early, and the right way of doing things is you wouldn't even be meeting with your real estate agent and going out and touring and
Yeah.
spending time
Yeah.
and petrol viewing properties without having the finance sorted out in
Yeah.
advance.
Yeah.
Why would you do that?
Yeah.
You want to be in a position that when you go out with your real estate agent
That
here
you
in
can
Spain,
make an offer.
you want to make an offer on
Yeah.
the day.
Yes, because this is really interesting, because the market's very different here and people really understand it. I often try and explain, you've got like 54 nationalities looking at the same properties.
Yeah.
So it's not like in America or in lots of other countries where you can take your time necessarily,
Yeah.
think about it, go back, you have a look, you think, oh, I'm going to go back for a couple of weeks. By the time you've gone back and talked about it with your family, that
It's
property
gone.
is very likely
Absolutely.
being sold.
Yeah.
Yeah. So if you're agreed in principle, to my mind, you're probably better positioned than a cash
Yeah.
buyer,
Yeah.
because you can
Really?
actually go to a vendor and say, look, I'm ready to go
Yeah.
to the notary in 4
Yeah.
weeks. There's my
Yeah.
agreement in principle.
Yeah.
That's a really
Yeah,
interesting point.
it's really
isn't it, Tracy?
interesting. Yeah, really
I've never
interesting.
thought of that.
Really
That's the
interesting.
way I see it, but I would do. I'm a mortgage broker.
Yeah, very true. So thank you very much.
Thank you.
Thank you very much for your time today.
I think that after this we might get a lot more questions in.
Yeah.
Can you come back?
Yeah, I'd love to answer specific questions that
maybe we
people
can do
have. Why not?
a live call in if people have got questions and
Yeah.
answers as well.
Of
That
course,
would be
Perfect.
good.
Yeah, sounds
And if
good.
anyone has anything, to send them to us.
Yeah.
And if you could share this podcast with all your friends and family, we'd very much appreciate it. So that's it. So
Yeah, thank you very
we'll
much
see
for
you.
coming. Really appreciate it.
Thank
See
you
everyone
for
on
having me.
Friday for the next episode of Spain Gain.
See you on Friday.
Have a nice week.
Bye.